morning, Thursday. Market open already. Today is October 19th, and actually market is 11 o'clock, 11:08. Market been open for an hour and a half over, and looking at the VIX is up here, which means the market is down. Volatility goes up, market is down. Volatility is above the 200 moving average on the VIX. All right. So keep that in mind. Is that we are at an a little elevated level, which is at 20. So looking at broader market, Dow Jones Industry is down 0.25%. Depressed it. QQQ down a little. Spider down a little. Alright, SOX is a little more flat. Yeah, but still down. Across the board. Financials down. Yeah. Oil. Okay, oil staying up above this level. And dollar yen. Wow. Gunning for 150. Getting very close. Expected to go there eventually. Yeah, this dollar yen strong. Bitcoin on its own thing. Okay, finally above 200 days moving average. 20 years treasury coming off, still very sitting a little low at the low level. Gold $181 an ounce. Okay, 181. Yeah, just there. And FXI. Yeah, so that's just it's pretty bad. So now I was looking at my other trade. Lee, it went below my strike price. Coming back a little, but 34 was my strike on the option contract. So I'm losing money here, but I intended to convert, convert into holding 100 share of the stock each contract. So yeah, secure put on this trade. I was using it. I'm waiting for it to come in. Basically, if it comes in, I'm gonna let it convert into stock. Let it exercise. If not, then I will park up the premium. So it looks like I'm gonna get exercise. Tomorrow is the option expiration day, third Friday, 3 o'clock. Okay, an hour before market close, the option expired. So you're gonna get converted. Look like expand. Yeah, took a crap on that last few days. It just go right through my strike. Looks like that is gonna get exercised. So I'm gonna, for each contract I wrote, I will pocket the premium, plus it's gonna get exercised. I can close out the position and take a loss, but I'd rather hold a stock. I want to actually hold these stock. I have a fundamental long-term bias on these guys. Yes, it did really crapped out if you're looking at this, but it's approaching 200 moving average, and yeah, that's fine. I'm gonna let it convert. I'm gonna own more shares. So that's that. And of course, that means NEO will be like, right. But NEO is way too under 200 days moving average. That's why I don't even bother to roll another secure put on that. So let's take that off. I own these for stock. Okay. So wow, BBIDDF. Wow, hammer. That's a good buy too. So should I also roll the secure put on this? That would have. It would not have get exercise. So these two are weaker, and those two is going to get exercise. And yeah, normally if I don't want to hold it and hold the stock, then I will have to take the loss, and that's how it is. It's trading, right? You make some, lose some. But the thing about selling options is that you make very little compared to what you stand to lose. Of course, the upside is that your probability of winning is very high, but not this case. There's always these situations that 10%, 5% of the time, they do get exercised. Then what do? Then you ask yourself, do you roll another contract? Right? Roll into the same strike price and waiting for it to spike back up too. You can do that. Right. For right now, I don't see any uptrend on this. It's a value fundamental long, so I don't mind holding a little bit more, but I'm not going to extend this contract again. I'm not going to roll another one in that sense. I will wait for it to pick back up and then wait for the trend to resume on the upside. I don't want to keep continuing buying on the way down. I would buy once, twice. I didn't get this one, so this is my one, my leg in, and I will prefer it that way, and then save my next entry point when it resume an uptrend. Okay, I will wait for it to establish uptrend before my next entry. This is a low point. I will buy a little bit more, and that's it. I will let these options exercise, and that's that. I will, and just look back until the uptrend reestablish itself. When is uptrend going to reestablish itself? Well, first you have to break the downtrend. So let me draw a downtrend line on this guy. On a downtrend, you connect the tops. Okay, when it trade above this line, this will be my resistance line. Okay, when it trade above, then I will start following it. Start looking for uptrend. You need to first trade above this line. On Lee, on the expand. Also, again, I'm going to draw and connect. There we go. Connect more tops. I prefer. Okay, there we go. Okay, when it trade above this line, preferably like $17, $17.50 or so, then this downtrend is erased. Until then, yeah, look, everything is closing, coming back down, and then it might pop back up after option expired. My option contract expired, but that's fine because I will own the stock, and it's even greater. I will stand to gain a lot more on the way up. That's the whole point. Is I can stand to gain a lot more on the way up now when the whole actual stock. I have pocket wallet for premium, whatever it is, for 16 cents a share, was fairly low, 16. Yeah, it was $16 per contract, but holding additional 100 shares per contract. Every time I move $1, I will bring $100. Right now, yes, I would have lost money. Actually lost money because I actually bought it at this price. At the strike price, $34, not that price. Right? So if I get out and close the contract, then I will lose that. Right? That will be what? Right now is, let's say 1359, 1350, 140. Yeah, I will lose 140-ish contract. But I have a fundamental long, so I don't mind holding these stock. I want to own more of these stock as it comes in. In actuality, I have a fundamental value long. And they're cheap. They're cheap. $13 a share. The other one's a bit more, $32 a share, but yeah, they're still relatively cheap in actuality. When it's spike back, I can easily make. If we go back to the previous high, that's easy $10 a share. 100 share, well, 10 times 100, $1,000. Right. So as long as my fundamental long. Oh, and EV, yeah, these are the EV stock I actually want to hold. I actually don't want to hold Teslas. Yeah. So these are the guys that I'm sticking with. Okay. Let's get off this. Get off of this topic. I'm still going to hold it. I'm going to let it get exercise. Go back to the main trades that I've been looking at Google. Right. So the market is a little down today. Google is coming in a little too. So it's just moving with the market in that sense. It's chopping around. It's going sideways now. It's very clear it's going sideways on Google. Well, so yeah, going sideways, came off a little. So yeah, so that breakout, this breakout was a freak breakout, came back, and now it's just fighting at this level. Alright. So my assessments for now remains the same, is that I need the QQQ, the Nasdaq, to break back above this downtrend, just like for me to enter long-term, trend following trade, medium-term trend following trade. I need this, and which means the stock should have also do the same thing, break above this line, this downtrend line right now. Because of that, even when Google broke up, I did not initiate trade. I need the bottom market behind my back. I need the sector and the sector, preferable at least one out of the two behind my back is the bottom market, its own sector, and its stock. These three are major component of the pricing of the stock underlying stock. Okay, so that held me back for opening that trade, and I stand correct in that because it's just going sideways now. Right. On this was a doji star that I fought really hard whether or not to open the trade, and I decided not to because the bull market was not giving me that. So yes, we will extend this, continue to look for this trade, break up and retracement right now. If the bull market is above and the sector is above that downtrend line, that will be good. If it's break up to new high, yes, then I will take the breakout trade. Here's the thing. To take this breakout trade, you have to have wind behind your back. I mean, the bull market and the sector is both in the bull territory. Right? Otherwise, hold off that trade. If the sector or the bull market is behind your back, then take the retracement trade. If both of them is behind your back, take the breakout trade. Very clear rule, very good rules. Right? You have 2 out of 3, take this. The retracement trade. You have 3 out of 3, take the breakout. You have 1 out of 3, hold off yet. Don't take the trade yet because it's only the stock itself there. The bull market can drag it down, the sector can drag it back down. So we will hold off. And that's exactly what I'm doing right now on the Google. Google setup is there. I see a false hammer. Yes, I'm launching my Heikin-Ashi chart, so we can see another picture. Now, Heikin-Ashi is used to give me a clear indication of continuation of a trend and formation of a trend or changing of a trend. That's my level 2 that I add on to my level 1. Level 1 was what we're looking at using the candlestick pattern, using support and resistance. Level 2 is for me to have better additional indicator of a trend continuation or trend changing. Right? We have like Google, we have a trend, now it's just going sideways. So it's not time to enter yet. If break up, then I can think about it. Again, even if this break up, there's a level 2 overlay on top of level 1. It doesn't really supersede each other, they work with each other. There's no one additional weighting or the other. They both should be giving you the same indicator, answering the same question. Is it trending? In that sense. So, yeah. We have a lot of hesitation, doji star. Red, green, but this is all doji star on the Heikin-Ashi. That's why this is a clear indication. It's going sideways, right? Who knows? It might break up and then come back right back down like that. Who knows? Nobody would know yet. But Heikin-Ashi is telling me it's going sideways right now. Right? After a new uptrend. So that's fine. That's fine. Right? Going back to here, yeah, clearly it's sideways. Right? Even I have a false hammer. But it's not a strong false hammer. It's not like it come down and then it's sold off. And then, that's a mini false hammer. That's why, yeah. Right now, we're waiting. We just wait for better indication, better signals. Right. Yeah, now that's a nice false hammer. So it did work. But then it came back down. Now it's just doing that. Right, so up. Here's the interesting part. Google did not move as a direct uptrend. It go up sideways. It does a lot of this, so it's going to go sideways. Expect it to go sideways most of the time, and then it's going to make a break. Hopefully, but the bull market has to be behind for it to make these break. Right. We can overlay. Let's overlay QQQ. Okay, now we see. Orange line is the QQQ, and it's a very clear indication that it is stronger. But QQQ is a slight down curve while it makes new up curve. And another thing is we have this situation of the MACD showing that not picking new height even the stock is making new high. So this is MACD. This divergence is a reversal signal. That's what I'm afraid of. A reversal signal, because the market is that, well, it's continued to make new high, but on this one, this peak is still lower than the previous peak. So the momentum definitely is dying in that sense. So I have to be very careful. I have to be more cautious, because when it reverses, then will be more seller. And it will push it down further. Easier for it to collapse back down in that sense. I waited for it to come down and then show me Doji Star Falls Hammer. Right, but if it comes down, the bull market would not be above that level. So it's get tricky now. Get very tricky on this, because he's kind of like a leading. I was just notice the QQQ will move around, but it doesn't matter. It's the level where it's at. It's not absolute. If I zoom in, it pops up here. You notice the QQQ line, right? It's okay. Right. If I zoom out, it moved down. I continue to zoom out, it move all over the place. The QQQ, yeah. Because now it's in percentage term. You see, okay, not absolute price. Percentage term of the bar on inside this graph. So as I pull in, it will move, because now it's taking this level of instead of that level as comparison, where we're using this as a percentage term. Okay, but that's fine. It gives you an overall picture of where, kind of like, oh, this is a downtrend on the QQQ, right? Lower low on the peak, while it's an uptrend making new high on the sky. The problem is QQQ is making lower low, and I have a diminishing peak on the MACD. That just make it less convincing to open the trade. So yes, we're gonna hold off. We're gonna wait. I would like this to break this QQQ to break the up line. That means go do a breakout and then wait for the pullback. That is the trade. I need the bull market to give me that. I need wind behind my back, and not just stock by itself to open a trend following trade. In that sense, so I have to be patient. You will get a lot of fourth breakout and trend following. You will take a lot of small losses on trend following, and you want to avoid those. You want to avoid those. You have to have more straight entry setup in that sense. Okay. Well, that's about it for today. I'm just tell you what I think, and the other guys, we can take a quick look. I don't want to make these sessions too long and drag on. Yeah, they're just doing they're pretty much the same. Google is the leader right now, and Google is the one that I'll be watching and waiting for the market to pick up and break above the downtrend. In that sense, other than that, yeah, pretty much Apple is kind of moving exactly like the QQQ, so it's a good representation. Well, Google is the leader of that, yeah. Good. And Meta, that's Meta versus QQQ, yeah, almost pretty much the same, yeah. So okay, the video, quick look at the video. Yeah, these guys are a little bit up, yeah. Loading. Yeah, I'm just getting so much more information all up. Anyhow, so yeah, TSM. Oh, TSM have news today. They report earnings. Right, it's the biggest drop in profit in nearly 5 years. Okay, but they still actually, yeah, but they actually still beat the estimate. The quarter report. Weak demand for consumer electronics post-pandemic, basically. Okay. Revenue, net income, both it beats net income, beat revenue expectation, but it's telling you that profit is dropping rapidly. However, TSM gapped up and then trade here. But now it's indecisive, which makes sense. At least it gap up above the 200 moving thing. Right? It was like dying the TSM thing. Right, so did it break the downtrend? the bigger question is, did it break the downtrend? Alright, so let's draw a trend line. Let's draw a line connecting these. Okay. So this move actually broke above downtrend, broke above 200 moving days average. That's what I want to see on the Nasdaq to do, the broader market to do. Break above this trend, and then I would take a uptrend and retracement trade, not a breakout trade directly yet, until it clear. If it broke new high, yes, I would take any breakout trade right there. That's the difference, right? That's people will have more conviction to buy on the breakout in that sense. Okay, so now waiting for setup, waiting for the other pieces to come in that sense, but not on TSM. Again, I'm just overviewing the piece that I want to point out the fundamentals, what have taken place. Right, earning came out, and then what is trading at. And what is it doing? Right? Again, the Magnificent 7. Right? Google is the leader now of those 7. And that's the one that I'm keeping my eyes on. And give me indication of the other guys that I'll continue to cover these guys and look for a trend falling trade. That's it for today. That's it for this morning. Thanks for watching. Okay. And remember, prosperity happens never by accident. It's a plan. You have to do it every day. You have to look for these signs, look for these setup, and you accumulate wealth. That's how it works. That's not happening overnight.